Hello, everybody, and welcome to the Crypto Hipster podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, technologists, artists, you name it, all over the world of crypto and blockchain. And I have today, you guessed it, I have another amazing guest. All my guests are pretty incredible lately, so I'm really lucky that way. Today, I have the co-founder of Kairon Labs, Mathias Beke, coming to us. Mathias, welcome.
Thank you so much for inviting me, Jamil. Nice to meet you.
Nice to meet you too.
Thanks for the warm welcome too.
Oh yeah, definitely. The more I learn, more people I talk to, the more that I learn that I'm not the smartest guy anywhere in this industry, that everybody else is. So this is great.
For sure, yeah. So much moving parts, yeah. It's crazy.
so
Super
many
interesting for me.
Yeah, so many moving parts.
Yeah.
And we're going to talk about one of those moving parts today. Let me first ask you, what is your background, and is it a logical background for what you're doing now?
Cheers. Yeah. So, background. I'm an engineer. I'm currently 32. So, I studied engineer and then worked at a bank. Very quickly was involved in like matching all the pieces of the different technology pieces of the bank. And so very quickly I was involved in obviously trading systems and how we can connect them, how we can speed up and, quants and et cetera, et cetera. And so then in 2017, I went full-time in crypto. And then late 2018, we started Kairon Labs. And looking at my background, the experience I gained there is tremendous, right? So there are so many moving pieces, as you mentioned in crypto. For us as a market maker or liquidity provider, it's exactly the same, right? There's so many moving pieces, so many exchanges, so many blockchains, decentralized, centralized, which allows us to make sure that our architecture is properly set up and we're really able to scale further on. So I must say, yeah, my background does help me a lot in the day-to-day business that we do at Kairon Labs. Yeah.
2017.
Yeah.
There's been an evolution of market making since then, which I'll get into after I ask you about Kairon Labs, what you guys do, what you're great at, what's your area of specialty.
So, Kairon Labs is 2000 and 2018, as I mentioned. So we've been in the market for a while, right? When I started, stable coins were barely used, right? There were so many inefficiencies, and that's how we actually started picking up. So we've been quite early, not the earliest, but we've been quite early with everything. And so Kairon Labs is a focus on market making, liquidity provision, mainly for altcoins. We do market make on our own, BTC and Ethereum on specific exchanges. But our niche and our focus has always been altcoins. Very broad range, top 100 coins till even further. Our expertise, I must say, has always been launching coins. So we're very knowledgeable with FDVs, understanding market, understanding sentiment of the market, understanding exchanges and their requirements. That's always been a very strong point for Kairon Labs and has been a very strong focus for the last 2 years for us. I must say we're a small shop, right? Well, small, not anymore actually. We're almost 50 people right now. So we're a little bit still like a boutique shop, let's say. We're very hands-on. We're still very approachable. Founders are still very approachable. Still hopping calls with clients once in a while or with exchanges to explain our business, to support. So that's a very strong point on Kairon Labs. And on our side, we try to be as transparent as we can be about market making, because as you mentioned in the introduction, like market making is for a lot of people a black box, right? What are they doing? What exactly does that entail, market making? And so we try to educate people like what we're doing here on this call to make sure market making is not angry black box of a beast, really trying to support as good as we can on what market making is, and doing our uttermost best to be as transparent as we can be in the business that we're in. So that's for sure our strength as a liquidity provider for market maker. Yeah.
Okay, I got into this industry in 2017 too.
Okay.
And I was started as an ICO advisor. So I'm going to walk you
All
through a
right.
little my understanding of how market making is, and you can fill in the rest for me, please.
Yeah.
2017 was ICOs, and we went to Small Cap Nation and other places to get liquidity and make desk and stuff like that. Then after the crypto winter happened in 2018, Binance emerged, and they had these popular things called scam wicks. So that made the market, right? The scam.
Yeah,
And
it's crazy.
after that, FTX came on board and became the market maker, and then the implosion happened there, and then everything became bot related.
Mm-hmm.
That's my understanding of how the evolution was since 2017. What actually happened, and then in this post FTX world, what's going on now?
I think pre-FTX maybe is also an interesting food of thought. Is Alameda, which was, let's say, the fund slash market maker slash whatever they were, investment firm, they were everything. They really absorbed a lot of the market as a market maker, especially for these launches. They were able to pull a lot of new token projects, but also older token projects into the Alameda firm, and actually launching them on FTX and launching perpetuals and making it super sexy for these projects to go with Alameda, because it was like a stamp, right? It's like approval, like, well, Alameda is in the game. And we were a bit wary about, like, how is this even possible? What exactly are they doing? And so we started analyzing what they were doing, and they were not doing that much for these token projects, right? And the only thing they did was launching them on FTX and playing around with what was happening on the price. So that was quite concerning for us, to be very honest, and we were pretty wary about what was happening on FTX, while we were trading on FTX. And then the implosion happened there, and now post FTX, you see again more of a consolidation of the liquidity providers and market makers, the typical known market makers, and then you have these more shady market makers going into the post FTX that is picking up again. So you see these distinguished two parts, but you see more like a consolidation. You also see more traditional market makers coming into play, right? Like flow traders. They've been in the market already for a while, but they've been being more solid on the market as of late, and I think that's a good thing for sure. There's I think the FTX event was a good thing and a bad thing. The bad thing was it gave such a bad light into what our space represents, and what can still be done in let's say a regulated market as today, although regulation in crypto is not yet rolled out properly. But and then the good thing is actually now regulation is looking into what we're doing, right? And looking at MiCA in Europe, trying to finally create a framework where we can operate in, right? Making sure we're not going outside of the framework, and making sure there is a framework. And so that for sure helps us a lot. So that's a bit the post FTX side of things on our end. I think from a market making perspective, the situation still remains, right? It's all about making sure these launches are properly handled. The traders have very direct access to liquidity, low spreads, high liquidity, making sure they can properly trade on these coins without big price gaps and so on, right? So that utility remains, that hasn't really changed. I think in the business of market making, a lot of projects and a lot of traders have an image of market makers as in their pump and dumpers and price manipulation and so on and so on. But there is some truth in that there are market makers that do this, but these are not market makers, right? These are actually non-legitimate, non-ethical trading firms, right? What they do are not market making. Market making is providing liquidity, and at such a high frequency that we do make profit, but we don't make profit out of price, right? That's not what we do. That's not our goal. And so that's a big distinguish between the two of them, and I feel that that still is not super clear for a lot of people. There's a big difference in those two weights, let's say. Yeah.
So let me explore that utility first. You said pump and dump. That's a popular phrase in crypto. It's been a popular phrase for a long time, and you have these meme coins that are they're fresh meme coins being pumped out to the market now, but you have companies that or projects that have fully launched all their cryptos that are no longer, held by the team or held in escrow, that are all out there, right? And those have been impacted by the market's downturn, right? And they're building utility on it, but some of those projects need fresh infusion of being able to, or we just let them all die, right? That's an area that, I think is unaddressed, right?
Sure.
How can it be addressed, and how can we put infusion into some of these fully, distributed token projects?
In the end, if it's fully distributed, it's all about what is the utility, and then because of the actual utility, if there's no utility, then actually it's gambling, right? Let's be honest. Like you take an assumption that most likely something hopefully will happen with a meme coin. And to be clear, some meme coins actually have utility and have really a builders community, and there's actually something happening, right? Which I support. It's mainly about what happened in Solana, just rug pulls, right? Which is just it's just criminal, right? It's just scam. And to answer your question, I think for me it's all about utility. If you're fully diluted and you have utility, then eventually, if the builders keep on building, then actually the coin is actually worth something, because there's actually something happening on it, right? So that is for me always the simple answer. There needs to be a utility in order to have a drive. I think when it's not fully diluted, you always have a bit of speculation, right? It's part of what we are in. We're in a financial business. It's not much different than stocks, right? There's always a certain speculation aspect into play, and also there, in the end, you're speculating that the price is going to go up. But what is the price driver is utility, right? It's actually somebody's using it, right? There's a substance behind it, and that is what matters. And that, again, a lot of token projects are missing the ball completely, right? They look at the price, and that's all they look at. But in the underlying, you need actually to build something and have utility and have a developers community and so on and so on and so on. And that is for me the only solution, right? And you will see more consolidation of it, right? That is, I do think, is something that's going to happen. More and more of these liquidity, but also builders, they will just consolidate more heavily into specific meme coins and so on. Yeah.
Well, I wasn't specifically talking about meme coins, but you make a good point. You make a good point. If it's a utility project and it's not it's kind of like, I'm trying to look at the comparison to stocks. Like, companies can reissue more shares of stocks, or they can reissue debt. you're saying that companies with utility, projects with utility, they can always consolidate together the development.
Sure. Yeah. 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 I strongly believe in that, right? Because that's in the end, that is also how we look at the market. Consolidation will happen more and more, right? And there will always be competitors, obviously, but it's also something that you're seeing on the exchanges, right? There new players in the exchange business, it's extremely hard, right? Because it's already saturated, right? It's distributed. Now getting a piece of the pie is much more difficult. So then it's about consolidation, right? And that is something I see also with projects, right? Of course, if there are different technologies on like layer ones, layer twos, or even layer threes, that's more different. But yeah, so that's also how we look at these things for sure. Yeah.
Interesting. Thank you. So I want to talk about something called ethics. You are an ethical market maker. What's your definition of blockchain ethics?
For me, being ethical is being truthful mainly, right? So like I mentioned, we recently did a post on Cointelegraph about, for example, wash trading, right? Well, wash trading means that you're creating more volume than there actually is, right? So so you're not showing the truth in theory, right? You're faking something. You're faking volume, which in our opinion is not ethical, right? So that's like a very good example of what I define as being ethical. It's having a proper set of rules. Today, that framework is gradually being rolled out within crypto, but having within our own company and with our own clients a very clear set of rules of these are things that we do and these are things we don't do, right? Like, for example, in traditional finance, go on the equities market, wash trading is not allowed, right? There's very heavy checks on whether you're self-trading, yes or no. And I know that even on these high frequencies, it can still occur, right? And then you're still finger pointed by the institution that's controlling these things. So also self-regulating ourselves as a trading firm, making sure that if we take our company and we would put our company into the traditional finance set of rules, would we still comply, yes or no, right? And that is for us being ethical, right? And obviously those rules are now being built out for crypto, and most likely they will very closely match with what's currently being done in traditional finance. And so that's what for us means ethical, right? So I think blockchain ethics goes even further, right? So that I'm mainly focused on the trading business on our side. Blockchain ethics goes even further, right? You have these DeFi hacks, you have I've seen projects also, sadly, their developers, they made in the smart contracts certain backdoors that they could mint extra tokens and these kind of things, or staking contracts that are hacked. And that's, of course, that's more like on-chain ethics, right? The thing is that it's an open space, right? It's a transparent space. So that means that there will always be a bad guy, always, right? There's no way around it. So even if we are ethical, that doesn't mean somebody else is going to be ethical. And so that obviously makes it hard to say, okay, what are blockchain ethics? For us, it's not much different than anything else in the world, but you're still fighting against the bad guys, right? That are finding these weaknesses or implementing weaknesses that they can use on later, right? So that's pretty hard to like, yeah, let's say protect or make a silo out of it. But yeah, that makes it more difficult, right? Because on blockchain, literally everything can happen. And then you have the debate of Well, is it like the mango attack that happened? It's already a year and a half ago, almost 2 years ago. Well, yeah, is that ethical? Yes or no? In my opinion, it's not ethical. And then but the question is, was it within the rules? Yes or no? Was it a weakness, or was it, let's say, a fault in the system, or was it an attack, right? And that these are the things that are very hard to define, for sure. And that's why, again, like I mentioned in previously, I think that's where regulation can help to create a framework, right? So yeah, that's like a very broad answer to being ethical as a market maker and what blockchain ethics could be or should be. Yeah.
When you're talking, when you're saying that, I just thought of the Slurf guy. One
Yeah.
man shot, meant to do the right
Crazy.
thing, did everything properly except made an error in the code and lost everybody's money.
Yeah. Yeah,
that was,
exactly right. That's the hard truth in what we do. It's all like one small mistake and you're gone in a in a snap, right? So it's super hard, super frustrating, and it creates a lot of pressure on the shoulders of anybody that's working on blockchain, right? So being diligent is crucial in what we do. Yeah.
I agree. So, you said truth, standards, rules, and getting rid of wash trading. And that's an area that people still can't figure out if it's a wash trade or if it's a bot, or
Yeah.
what are some rules of thumb that you give to people when they should be looking at, when they start to look at a new token to invest, like
Yeah.
it's real volume or not?
Yeah, that's a very good question, and actually, I'm happy that and I can explain, because it's really something that I'm pretty frustrated about. So you have two concepts if you're going into a market, right? If you want to invest or you want to trade, there's one, liquidity. So liquidity means that you can buy an asset without buying it up to 10%. So you want to buy, just saying something, $100 worth of a certain coin. You don't want to buy it with a 10% price difference, right? You want to buy it at this price, right? So that's like liquidity. That's a bit more difficult to fake, right? So that's pretty crucial for it can be fake, but to keep it simple, that's a bit more difficult, and that's crucial for traders to look at, right? Now the other side is volume. Now volume indicates whether there are other people actually trading this, right? So okay, it's good to know that if I can buy an asset, I don't buy it with like a huge slippage. But I'm also interested if there are other people trading, right? If there's enough people trading these assets, so it's also showing that it's more distributed. And so that's pretty crucial. And so to go into your question on wash trading, actually, there are different forms of wash trading. So if you look into a chart, you open whatever exchange, the volume bars are giving a pretty good indication. If you go and look into the time frames of like 5-minute time frames, actually the volume there's volume, but it's stable. There's no change. It's just so there's constantly the same volume, which is not normal, right? You have Asian sessions, you have European sessions, you have US sessions. These volumes they fluctuate, right? They change, right? And that's one thing that I always look at, is like how flat, even if there's a lot of volume, how stable is the volume. The more stable it is, the more significant you could say, like, oh, this could be wash traded. That's one. And then two, is actually a wash trade. If we look at the market, a wash trade actually happens within the spread. So spread is like best bid, best ask. And so somebody places them, right? Could be a market maker, could be somebody else. And so those orders are there. And a wash trade is, in a lot of cases, not always, is happening between those two orders. And so you could actually see, if you open order book and you see the last traded price, and it's always trading within those two orders, then something's off, because that's actually not, it's not visible. It's not trading with something that is actually in the order book. And so these are like two very clear indications of wash trading. Yeah. If that makes any sense, because I'm I'm pretty deep into this. So
managing the volume and then managing the spread is, and with no outliers, is wash trading. A sign trading.
well, so yeah, it could be a sign, because in theory you could say, you know, a market maker like us, we create a good spread, right? Good bid, good best ask. Okay, we manage that, but if there's nobody trading with us, we're also just stale, right? So the moment that somebody takes an order, so a maker taker, you take it, then you have a change, right? And the order book shifts based on the pricing. But what a volume bot is doing is trading within these two constantly. And that last part is actually pretty crucial, because you're not actually trading with a counterparty. You're trading with yourself. That's the show of wash trading. And still, in very high frequency, you cannot even see this, right? Like, it's so fast. We're talking about milliseconds here, sometimes even less, and then it's more difficult. But in these lower liquid markets, this is a pretty clear indication. Yeah.
Interesting. I'm going to look for that going forward. Thank you.
I recommend you do, and make sure you also look at the liquidity, because that's super crucial too.
Yeah. Cool. Awesome. So what I'm going to do is I'm going to move on to the next question. This is a good, Dan. It's making me think. So, I want to talk about things that happened in 2024, like institutions like BlackRock. You have BlackRock, Fidelity. You have these large, U.S. based global institutions that are now getting embedded. I mean, of course, they're only getting embedded into Bitcoin and Ethereum so far. Maybe Solana, maybe some others. As they get more deeply embedded into the crypto ecosystem, what will be the role of you guys, of you independent market makers going forward?
Yeah, good question. I think these large institutions, they currently mainly focus on like Bitcoin, Ethereum, Solana, maybe Ripple, and that's most likely where it stops, right? They need organic liquidity to make sure that even when they position themselves, that everything is substantial, right? So that's how I look at these very big guys like a BlackRock, right? When they come in and they buy $1 billion worth of a certain asset, it needs to be stable. There needs to be a lot of liquidity. There needs to be a lot of counterparties involved. Otherwise, that market can, it's going to be too volatile for these types of institutions to come in. So that's at least our vision out of it. Now, where we come into play is these institutions. They're not very crypto native, right? Like I feel Kairon Labs is a very crypto native company, and we really understand the ins and the outs of all the components within crypto, and that's what we see in these larger institutions, that they miss this, right? They really miss the aspect of crypto itself being, the tokenomics, how it works, the launches, the different exchanges that are also differently set up, and they need to integrate with that, and it's quite extensive for them to work on that, right? So that is something that we feel that an independent market maker is giving a lot of advantages for these big players, because those insights can be given to them. Obviously, they have the cash to hire these types of persons too, which is also why I talked about consolidation. I do feel that certain firms in crypto would be absorbed by these larger players coming from traditional finance, just because they want to absorb that knowledge in in a snap, right? They don't want to have that learning curve that we've gone through for years in, years out. They just want to absorb it as soon as they can. They want to take a big part of the market. And so that is how we also see us as being an independent player, working on that education for the others, and being open for discussions on joint ventures and so on and so on. So that's how I feel these independent market makers going forward create a lot of value. On the other hand, also these big shops, they all need to comply with extreme regulation within their own business, right? And so that's where these independent market makers, they, like us, we're currently based in Europe. We're investing a lot of time and resources into the MiCA regulation, right? And we're even looking into how we can support the entity that is following up here in Belgium to also see how we can educate and support in order to enroll that, right? So, and that is also super interesting for these big shops to see, like, they don't need to invest into this themselves, and they can just absorb it very quickly. So that is a bit how we look at it. Obviously, that means the market is going to be extremely competitive, right? These big shots, they know the ins and outs of industrialization of code and speed of code and these kind of things, which are super crucial. So that's their strength, right? Plus the connections, plus the volume. And so these are the big shots that eventually we'll be competing with, or we're going to work with them, right? So it's those two things that we see happening in the market. Yeah.
Interesting. Yeah, they have the resources. I've been looking at some of their heads of crypto and they're some of them have like just like a high school diploma, right?
Exactly.
And I'm like, I don't think they're serious about putting somebody in there who's really skilled and talented. They could easily outsource, you know.
Exactly, and exactly what your point, and that's what we're seeing is that these bigger shops, they're actually really seeing like maybe it's better to absorb like a smaller shop than just hire people that we need to find that are 23 because they've been in crypto since they were in school, and because they cannot find these types of guys, right? And that's super challenging. I can only imagine, for sure. Yeah.
Very interesting. So, our industry, unfortunately, is still fraught with scams, rug pulls, bridge attacks. Not so much scam wicks anymore. But how do we solve the problem once and for all?
Yeah. To be honest, I don't think you'll ever solve it for once and for all, right? Like I mentioned, there will always be somebody who will find some weakness in something and try to exploit it. In the end, we're still humans and we develop stuff, and we have weaknesses or greediness or whatever. And so there will always be something, right? Now, the question is then, how can we make sure, like, for example, these rug pulls can be actually be tackled, right? Because in a decentralized economy, literally anybody can launch whatever they want and create some marketing and say we are the biggest project ever and we're going to replace Ethereum and blah, 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 and just pull the plug, right? So that's an issue. And so that's what you're also seeing is that very gradually people are looking, regulators are looking at Uniswap. Hey, what are you guys allowing here, right? What framework are you guys creating to avoid these rug pulls? And so that is sadly, regulation. Everybody looks pretty frowned upon the regulation within crypto, but it's a give and take, right? Regulation does help in protecting also, for example, like a rug pull, right? Or scams. Certain bridge attacks, you could say it's a bit more difficult, but like these very obvious things, that's where regulation really can help, right? The downside of regulation is that there's so much extra overhead created that it slows down your business significantly. And let's say every time you blink with your eye, you need to explain why you blinked with your eye, right? And so that is a balance that hopefully regulators can work on, like understanding that this space is moving so fast that the moment you pass a law or a bill, you're already 6 months or even a year behind because it already changed in a snap, right? But on the other hand, these rug pulls and obvious scams, we do need support. We do need people to actually be scared to do this, right? Now, I can imagine these guys are not really scared to do it, right? They're gonna, yeah, we'll just go through Tornado Cash or whatever mixer, and it's all good, and and so solutions like chain analysis are great to help on these kind of things, and that is, I feel, that very tight balance that needs to be taken up on, like, regulation needs to be there to protect a lot of players in the space, well, probably all, but then making sure that it's not over-regulated because they cannot follow, right? It's so freaking fast what we're doing. It's changing every day, right? As you know. And so that balance needs to be found. But in my opinion, for example, these bridge attacks or certain DeFi attacks, it will always be there. In the end, it's humans that are developing these things, and weaknesses will be there and eventually will be found. Yeah.
I envision. I mean, I'm pro regulation. There's certain regulators I'm not pro for.
Yeah. Exactly. Exactly.
And I'm not going to name names. So.
No, but it's true, right? It's exactly that, right? That's that balance that hopefully, who knows, eventually will be found, right? So that we're willing and happy to start working with whatever regulator is responsible for a certain entity.
Yeah. My vision is someday companies like chain analysis aren't needed because of transparency, right?
Exactly.
So why should transparency be the future of finance?
Looking at finance today, it's super inefficient. Let's be honest, right? There's so many parties, so many small margins being given for whatever reason, some cases also for regulation because it's necessary. Inefficiency times 100 million, right? It's the reality. If you look at Europe and America, when were these institutions created? A while back, right? When were they digitalized? Well, that's already also a while back, right? These systems are sometimes 50 years old or even more, and certain banks are still building on it, right? It's super inefficient on the technical side, and it's super inefficient on the operational side of things. And to point out, regulation, of course, like I mentioned, creates a lot of overhead, right? That's normal. But the efficiency is gone, right? And DeFi, in my opinion, is indeed the future, or a future for finance for sure. Looking at how these, Etina, for example, these on-chain T-bills that are being worked on, these are things that are super, super interesting because there's no middleman anymore, right? And me, if I obviously pass through the certain KYC rules and AML rules, I can immediately do this on chain, right? Which is amazing, right? I have my own control. And there are many other solutions on chain that really do help with efficiency and transparency on what is actually happening. And so I think that's for sure the ethos of crypto, in my opinion, right? It's in theory, everything started with BTC maximalists and guys that really wanted to step away from what we know as fiat currencies, and now you're seeing these large institutions, like we just discussed, are moving into the space. And so then it's about how are they going to use blockchain as a technology and DeFi as an application to also improve their own systems and their own operations. And so and to have, let's say, less friction in the way their clients or customers are interfacing with them, right, on chain, which is extremely transparent. And so that is for sure something I really see as a big benefit for or big, let's say, yeah, no, it's actually the ethos of what we're working on within blockchain. And so that these are the fundamentals for us. And so that's needs to be supported, that does need to be regulated, and that's where we need to build on, right? And I think eventually that's also where we are going through as a society in as a whole, and it does need to become it needs to become much more efficient on all the different aspects of finance. Yeah.
I worked in Wall Street for 20 years. I completely agree with you. Yeah. So I want to thank you very much for your time today. I learned a lot.
My pleasure.
Yeah, it was great. So I have one last question. And this one's the easiest one I've asked you. How can people find out more information about you, about Kairon Labs? How can they use your services? How can they do that?
Sure. Yeah, just type in Kairon Labs in Google and you will hit immediately our spot. And we work on certain blog posts to educate our customers, but also just regular investors and traders that want to get into the space. So kaironlabs.com is the space to be. We also regularly every week we make some on X, we do some spaces with some clients of ours or market or partners on our side, where we discuss multiple aspects within the blockchain ecosystem. And so also there, Kairon Labs on Twitter or X, you can find us there to get more educated on what we work on. Yeah.
Awesome. Thank you very much for your time today.
Likewise, thank you for your time, and we'll keep in touch for sure.